Well, welcome everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. It is May the 13th. Hope all of you had a fantastic weekend. For us, it was the last day of ski season, so hit it one more time. And sorry to see the snow going away, but you know what? It gives birth to the springtime and all the sports that we'll be able to do now. But always sad when ski season leaves us. You'd think I was a professional skier. I'm not. I'm just a, decent intermediate skier that started 4 years ago, but I just love the environment. So I will miss it for 6 months. Quick reminder that everything that we do here is for educational and informational purposes only. Should not be considered as investment advice. It's just me kind of sharing with you what I'm seeing in the markets. So let's move in the markets now with the Dow's coming off its best weekly performance in 2024. So hopefully you all did extremely well last week. This is big. Our next CPI print, there's your inflation number, is due out on Wednesday. Of course, this influences the Fed and their policy. We'll take a look at their expected move this year. 80% of the S&P 500 companies have topped their earnings announcements, but candidly, I think those expectations were brought down. So a top really didn't do a whole bunch. 10-year Treasury falls to 4.473. That is great for the stock market. And oil prices now sit at about $79 a barrel. Not much of a change there. So what to watch this week? Well, we've got producer price index. That'll be coming out tomorrow. That's kind of a big deal. That's inflation at the wholesale level. On Wednesday, we have the CPI that'll be coming out. Retail sales will be coming out. Some Fed speak. Thursday, initial jobless claims. Last week, it was hot, man. Came in at 231,000. So we're expecting 219,000 this week. Philly Fed manufacturing survey comes out. Building starts. And then Friday, we get the leading economic indicators. This is a very big earnings week. So next week, I'll be able to share with you the results of what got announced. Last week's heat map, a couple of companies kind of took it on the chin. Disney down about 9%. Tesla, again, boy, they've been struggling, down 5.85. NVIDIA down 2.89%. But you can see a whole lot of green. And for the last 12 months, it's been a sea of green. There's been so much opportunity. If you were just an average stock picker, Met up almost 100%, Amazon 66%, NVIDIA 213%, Broadcom 114%, Microsoft 33%, JP Morgan 46%. Profits as far as the eye can see. Now, there were some losers. If you were in the wrong stuff and didn't recognize it, you definitely could have got your wings clipped, but you should have been printing money for last year. Market breadth, I like to look at new highs versus new lows. Both are solid. The New York Stock Exchange, 216 new highs to 24 new lows. And on the NASDAQ, 168 to 100. Where have the returns been this year? Large cap growth has dominated, as it did last year. When we look at the biggest winners from last week, there's a lot of new names, or probably names on here that you've not even heard of before. So some of the more obscure stocks took center stage. Earnings surprises, well, if we beat, stock goes up 0.8%. If you miss, stock goes down 2.7%. So Again, the expectations were set pretty low. Bottom line is you better beat. Earnings are expected to accelerate fourth quarter of this year to be 13% higher than last year. And as earnings go, so goes the stock market. It's been said that earnings are the mother's milk of the market. A lot of truth to that. Magnificent Seven, they expect their net income to move up dramatically. So we would expect those stocks to continue to move higher. Economic surprises recently, pretty much all of this year, have been to the downside, which hopefully gives the Fed good reason to cut rates. Average stock portfolio in the US now, $195,000. That's pretty cool. Now, there are people that don't have any money in the stock market. Unfortunately, they've sort of missed the opportunity. But it's never too late, to start. I don't care what your age is. Inflation expectations are trending higher. So next year, we're expecting 3.5%. Over the next 5 years, 3.1%, which is a far cry from the Fed's goal of 2%. Market sentiment right now is neutral, which is really surprising to me. I would think it'd be greed. People have been making a lot of money this year, but people tend to be a bit more on the fearful side than on the greed side. Fed probabilities for a rate cut at the next meeting in June, almost no chance. July, 70% chance they're going to hold. So right now, an 80% chance, 81.64, that we'll see a rate cut in September, but this is fluid. And by November, between either September or November, it's 100%. Now you might say, well, nothing is 100%. I agree, but that's forecast. Let's take a look at the charts, see what they might have to share with us. We'll start with the S&P 500. Pretty solid. So for the last 6 months, we have been above this 50-day moving average most of the time. It fell below, but it's broken back above. Also, if you look at the slope on that 50-day, it is higher. So I would put us at mildly bullish on the S&P. On the Qs, ditto. So Qs are big tech. S&P, large cap. So all in all, we're in pretty good shape going into the balance of the year. We've got an election coming up. Should be getting a Fed rate cut. But the news this week could definitely impact the market. So be keeping an eye on all of that. All right. I will report back to you next week. Until then, be blessed. Bye for now.